that this is a good time to start getting back into the markets, or you think that the market still has some way to go on the downside?
Well, clearly, if your time frame is next 1.5 to 2 years, which is what it should be, now that the index has gone up to 8.5 to 9,000, and of course it has corrected right now. But I think that this market for next 1.5 to 2 years will remain buy on dips market. And of course, your stock has to be absolutely stock specific. But yes, I think by and large on a long-term basis, one is fairly upbeat and optimistic that things are going to look northwards. And I think recovery is somewhat which people are not too sure on the economic front. That probably will still come with a lag, and that probably will get reflected in the earnings gradually. But overall market still seems to be in the northward direction on a longer term basis.
All right. One of the sectors that's done most poorly through the course of this month, Anuj, has been the CNX PSU Bank Index. I think it's down about 15%, 12% for the month, down 20% for the year, and 5-6% for the week. But if those are the kind of CDR packages they're signing off on, then you really don't want to own a single PSU bank, right? Because that list of banks mostly was PSU banks involved in Pipavav. And it's lovely. I mean, the promoter contribution is, in the face of 12,000 crores of debt or 7,500 crores of long-term debt, you're bringing in 190 crores. Your interest rates are going from 14% to 11%. Your tenure for the loan is getting extended out by 5, 7, 10 years. And really, all the promoter he's selling out and he's bringing in just about 190 crores or something
the best part is that, in this country, you default on one payment of your car loan or, home loan, and the bank will seize your car, right? You default on 4,000 crore loan and the bank will line up to pay you more so that they can recover the earlier 4,000.
It's astounding. No wonder nobody wants to own PSU banks.
24%
right?
from the peak, by the way. A quarter of the market cap has been lost for PSU banks.
On the PSU bank index is what you're saying, yeah? Yes. Dilip, you have a view on whether PSU banks are, at all worth owning?
Well, I heard your the debate which you all had just right now. But I think it's one thing is sure, it's very difficult to imagine that there may be a few select such cases where there are only PSU banks. But if we are to take all the top names which probably are under CDR among the top, I think it's very difficult to imagine that the private sector banks will not be there. Of course, one is not talking about HDFC Bank and the likes because they are completely absent in the project funding. But it's very difficult to imagine other banks will not be part of that, considering the fact that they do have a size. But having said that, I think what's really happening is, you're right, that PSU banks continue to look very vulnerable from the current levels. And more so, I think if I'm correct, that last couple of quarters where possibly the greening could have stopped, which is what has resulted in accelerated declaration of the NPAs and the restructured assets. So I think maybe 1 or 2 more quarters we'll see this thing coming. But perhaps what we should still watch is this government is trying to bring in some amount of professionalism, in the sense some CMD who is going to be from the private sector, hopefully, who will own up the responsibilities. So that change in the management is something which we should watch for, and maybe the realignment of loans to the actual
Dilip, even as you're speaking, Mehrbun.
Dilip, let's move to telecom. The markets are giving a slightly concern about the price they paid, but obviously the management knew what they were doing. What would you do with them? Dilip?
Sorry, can you just repeat that question, please?
Telecom stocks. The market's slightly concerned about the price they paid for the spectrum, but the management obviously knew what they were doing. What would you do with them?
I think if you want to play as a resilience to give your portfolio that support or some kind of defense, maybe you can buy the telecom stocks. But clearly, I think one can see that the capital intensity of the business has gone up. And secondly, the return ratios are going to be poor. And I don't think that anything clarity has emerged that the ARPUs are really going to move up. So I think against that, maybe this is at best a defensive stock. But otherwise, I think there are better stocks to play really on a proactive basis for a slightly longer term.
Such as?
No, in the other sector, that's what I mean.
Yeah,
whether
like
it's
which
a
ones?
Like, for example, I think I would still buy a Larsen & Toubro. As what I'm just trying to say, that since the economic recovery is still some time away and it's not really to be immediately seen, I think the concentration should be on the frontline stocks, whether it's a private sector banking, whether it is frontline IT companies, whether it is pharma companies, or maybe a very select mid caps, which are still, you know, something like a Cummins or maybe like a KPIT. But I think the concentration should be somewhere on there. Larsen Toubro also looks pretty good and interesting.
Okay. And there we've got it. The markets have closed.
Corrected quite a bit, and where you think there's still some value, or value has re-emerged maybe?
So, well, I think, as what I said, something in, maybe in the IT pack, something like a KPIT or maybe something like an Emphasis would really look pretty good. But otherwise, maybe in the pharma segment, something like, I don't know, Glenmark would qualify as a mid-cap in my opinion. So that would probably look pretty good and interesting for me. And maybe something in the cement sector, something like Prism Cement, which probably has not corrected so much, but still slightly on a longer term basis as a mid-cap, that's something which I would be looking at.
Manas?
Coal India?
Not exactly, no.
Okay, but Dilip, what about you, Coal India?
Well, I think probably I don't think it's really going to show any great appreciation, because I think the volume numbers in terms of the growth is still not something which everybody is prepared to buy at the moment. And I think even the capex that they will have to do will be quite significant. So all in all, it's probably at best it can be taken as a defensive stock rather than any proactive returns.
Okay, Sonia has been earthworms, Masti stocks,
yeah.
earthworm stocks.
And quite a few earthworms have gone back into the ground in the last 4 weeks.
Dilip, what would you pick as some high beta plays, with the emphasis that they are high beta plays and therefore volatile stocks?
Well, for me, I think this infra and the infra stocks as well as the real estate stocks, some of them, I think probably will be a good leveraged play at the moment. I think a little more clarity as to how these things are going to be sorted out, and I'm sure it will be sorted out sooner than later with the new government in place. So I think one can take, because on a risk return basis, once again I feel that the risks probably are very, very defined, and maybe I think we'll see some a little more active acquisitions or new managements taking over. Some of these things can happen, or some of the assets being sold off, which can be a good trigger, you know, which can really bring good amount of cash to these companies to execute their projects. So I think these two sectors probably would look a lot more interesting for me.
CNBC